Self.inc. What is it and how will it allow me to improve my credit? Self.inc is a secured loan, but how does it work and what is the big deal with secured loan anyway? Let's find out. In previous videos, we have gone over several pre-approval offers that I have received, as well as my strategy and what I'm doing to improve my credit. I will put a link at the end of this video if you want to see my strategy. We will be going into more detail in the future, so be sure to like and subscribe to watch them as they drop. But why did I get a secured loan? Now, your credit report is made up of several factors, and your ability to repay loans is one of them. By getting a loan, making monthly payments, and paying it back, it shows future banks that you can manage money, making them feel secure in loaning you some later, perhaps to get a new car or to buy a home. Now, if we had good credit, then we can walk into a bank and ask for a $500 loan. They would look at our history and say, sure, giving us the money we desire. If we don't have good credit, then it becomes much harder to get the process started. A secured loan is one tool we can use to help start our credit repair journey. Let's see if this is an easy way to describe secured loans, and let me know in the comments below what you think. When you find yourself a little short of cash, perhaps to pay the light or water bill that you forgot, you could go to the pawn shop with your favorite ring. They will do a quick evaluation of that ring and then loan you money based on the appraised value of the ring. This is what's known as a secured loan. After a little bit of time has gone by and you have the money, you can go back to the pawn shop where they will take your ring out of their safe and you'll be able to take your ring back home and enjoy wearing it. However, if you do not pay back the money, then they are able to keep your ring and sell it to someone else to take home and appreciate. A secured bank loan is about the same. You take some cash to the bank, let's say $500, and put it into your account. Then you ask the bank to loan you money, $500, secured by the amount that you have in your account. As the bank has your deposit locked away in their vault, it feels secure of being repaid for the amount, so it should be able to give you that $500 loan, which you need to repay a little each month till your loan is paid off. When the loan is paid, they unlock your bank account, allowing you to have your money back. This is a great way to get that first loan. Get those positive check marks each month to show future banks that you can pay back a loan. But what if you don't have that spare money? What could you do then? Are you locked away from improving your credit? Nope. Along comes Self.inc. And by the way, I do have a Self account, as you will see. And there is a referral below that I will get a $10 credit, and that does help me for making this video and others, so please use it if you choose. Now, Self.inc is not like your standard example above. In its simplest form, they will give you a loan that they keep secured until you pay it off, and then they will send it to you. Perhaps I need a demonstration again. As mentioned, in a perfect world, if you have good credit, you would walk into the bank and they would loan you money against your signature. This is because you have shown that you are trustworthy and will pay your loans back. When you don't have perfect credit, the banks want security. This could be in the form of money, a car, or a house. If you don't pay your loan, they repo or repossess that item and sell it just like the pawn shop did before. With the loan above, you put your money in a bank safe and they give you money secured by your account. However, how can we get the credit if we don't have credit to start with? Or perhaps we have bad credit from before we learned how to manage credit. That's where Self.inc comes in. They will take some of their money and put it aside and then loan you money against it. Now, unlike the banks that give you cash against your deposit, Self will hold on to it and give it to you when you have paid them back. So let's look at Self.inc's website and see what the options are. On the main page, we find number 1, apply for a credit builder account. Your money is safe and secured. They do no hard pulls on your credit, which is a good thing because we do not want a lot of credit inquiries. Number 2, pay off your credit builder account in the specified amount of time, and you can choose your payment terms and the dollar amount, which we'll get to in a few minutes. Number 3, each on-time monthly payment builds credit history and adds to your savings. Your monthly payments are reported to all 3 of the credit bureaus. 4, unlock your savings. Once you've paid off your credit builder account, your CD unlocks and the money is yours, minus any interest and fees. It also gives you a teaser about your Self credit card. Now, this we will get to shortly, so stay tuned to learn how you can get a secured card with Self in just a few minutes. They also do report to all 3 credit bureaus with each monthly payment, so this will help grow your positive credit file. Want to learn more? Let's click on the Learn More button, and we find out that you can pick your plan. Your security is actually a CD that is held until you pay your loan off and then it's sent to you. Now this slide gives you a great breakdown. Month 1, choose a plan. Open your Self Credit Builder account and pay your non-refundable administration fee. It's just $9. The second month, start making your monthly payments. They handle the reporting to all the credit bureaus. Based on if you choose 12 or 24 month loan length, once you've finished paying off your credit builder loan, your Self Credit Builder payout tracker will show you when you get your money, minus again the interest and fees. Now, speaking of costs, let's keep in mind this is a commitment. While looking at this next slide, I want you to succeed. So remember, rain or shine, you are agreeing to pay this each month. And as far as your credit report goes, it will not matter if you get the lowest price or the highest, as long as you make your payments each month. Now, let's talk about the dollars and what the plans they have. The first is just $25 each month for 24 months. Total payments is $600. They charge interest on your loan at 14.14% for this one. So at the end of the 2 years, you have 24 positive check marks for making your payments on time, and they will send you $520 for a total cost of just $89. Option 2 is $35 each month, again for 24 months. Total payments is about $840, and they'll send you back $724 after 24 on-time monthly payments for a final cost of only $125. Option 3. This one is the one I chose as I wanted just 1 year and has the lowest cost of them all. $48 per month for just 12 months. Total payments is $576. At the end, I'll get back $539 when I have made all my payments on time for a cost of just $46. The final option is the extra large builder. At $150 each month for a year, it will return a whopping $1,663 at the end of your 12 monthly payments. The cost for this loan is $146 for a total payment of $1,800. Now let's look at the interface of my credit builder account. On the main page, we see my credit score, and it has gone up from 557 to 641. in the time that I have had my Self account. Now, this is a Vantage score, not FICO, but still it shows improvement. My savings progress is $355. Next, autopay is on the 6th. It was the 26th of each month, but I changed it to the 6th to have an easier time with making payments. It shows I have unlocked the next step in building credit and have access to the Self credit card. Now, I am not going with this at this time, but I will explain later what other options are for secured cards. It also gives me my referral link. It is below, and I do appreciate your using it or any of my referral links, as it does help out the channel. Now, on the bottom, it gives some tips on using and building credit, as well as some self-partner links to other loans that I have not checked out, so I cannot recommend to use or avoid. One reason I picked the 6th, instead of having it default on the 26th for my payment due date, was so that I could check each month and make sure the payment went through. When I lost my debit card and had to get a replacement, I missed the payment on April 6th. I gave them my new information and made my payment a few days later on the 13th. The payment was not late, as the due date is still the 26th. Now, when I click on the More Details button, it comes up with a page with all my personal account information that I'm not going to share, as well as full payment history option. And this, we can see, is very straightforward and easy to read with my 8 payments. Now, onto the secured card from Self. After a minimum of 3 months and you have paid in at least $100, you unlock the option for the secured card. It has no hard inquiry, no annual upfront deposits, and is a Visa card, so accepted all across the U.S. and the world. Once you meet your minimum requirement of 3 months on time and $100 in your savings, you will be able to choose how much of your savings you want to be used as a security deposit. This amount will be your credit limit. And as you make your monthly payments, you can use this to increase your card spending limits. Now, as we see here, this is not a horrible secured card. It does have a high interest rate, but if you have been following me, you know I do not carry a balance and recommend you do not as well. So the annual percentage rate is not that important. Annual fee is low for a secured card at just $25. Now, for the bad news, the disadvantages of this card and Share Builder, starting with this credit card. It does have an annual fee, although it is low at just $25, and it will cost you that same $25 each year you continue to keep this card. Now, as far as secured cards go, this is pretty darn low. Annual percentage rate is high for a credit card at 23.99. It does have a grace period, so if you get this card, make sure to pay each month in full, and it will not matter. Lastly, this card will not graduate, so it will always be a secured card and will only go as high as your deposit into your credit builder account. I will link a video at the end of this one of 8 secured cards that I like and do not have an annual fee but do graduate. Now, however, if your credit is non-existent or totally trashed as mine was, it is a good option as they do not pull a credit report and it will add positive check marks to all 3 agencies without you having to pull money out of your bank that you may not have. Now, for the drawbacks of the credit builder account. To be honest, there's not many. All of the fees are right there on the screen. The interest rates and fees combined are all under 16% as long as you pay as you agree each month. Setting up autopay is the easiest way to make sure it's paid on time, and it will be a great way to build credit. Also, as mentioned below in the link for Self.inc is the referral to me. There's also several other links for Amex and Chase cards. Both of us get extra points if you apply through the links to get the card. Now, if you like stocks, there's also a link for 2 free stocks if you sign up with Webull. Finally, here's the 2 videos that I mentioned right here. My strategy and 8 secured cards that graduate and have no annual fee. Folks, till next time, I'm out.